Hello, everybody. My name is Jeff Gibby, and I'm going to have the pleasure of reading a legal disclaimer for you. You've probably heard me say it before, but today's demonstration is designed to introduce you. Let me try that again. Tonight's presentation is designed to introduce you to MetaStock and the accompanying software and data. It's not a recommendation to buy or sell, but the information, software, and techniques presented should only be used by investors aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Okay. Welcome to tonight's class. It's good to have you here. Today we do have a very, very special guest. Bruce, for those of you that aren't familiar with Bruce is somebody I had the pleasure of actually sitting through and doing a class with here in San Jose over the weekend. And he does a very, very, it was a very good lesson. He does a really good presentation. To give you some background on Bruce, and I'll let him fill in some of the gaps, but Bruce used to be one of the head instructors for InvestTools. He's been working with the markets for a very, very long time. And as somebody that's seen a lot of presentations, a lot of market material, and a lot of things over the years, this is a presentation that you're really, really going to enjoy. And I can tell you that because I certainly enjoyed watching him in San Jose this weekend. So that being said, I'm going to go ahead and get out of the way. I'm going to go ahead and bring Bruce in, and I'm going to let him go ahead and have the floor.
All right, guys, this is Bruce Stinger. I had a little problems there with unmuting the mic there. So I just want to do a real quick sound check to make sure you guys can hear me. If you can, go ahead and type in yes in the box there in the chat box that you can hear me loud and clear. Right now, my voice should be sounding, if this works properly, it should sound like the voice of an angel. All right, very, very good. I'm going to go ahead and I'm going to share my screen with you guys. And I don't know what Jeff was talking about with regard to risk in the marketplace. What risk are we talking about? Yeah, there's all kinds of risk in the marketplace. Anytime you do investments, there's risk involved, right? You guys just got to be able to accept it and own it as we go through here. So when we go through the markets, a couple things that I want to go through, folks, is I want to be able to talk about really what investors should really be taking a look at. And I'm going to talk to you just from a professional trader's point of view and from really a student of the market and being able to take a look at what has worked well for me and pass this on to you. A lot of folks take a look. A lot of folks will take a look and they'll say that they want to start with options or they want to start with the derivative of the marketplace. And that's really the wrong place to start. And that's where a lot of people go wrong. It's where a lot of folks make mistakes along the way. It comes down to what I say, doing a top-down analysis. So this is what we're going to be doing today. I'm going to leave you with some things that I think you'll be able to use in just about any market. And any good trader, any good investor that's in the marketplace needs to go ahead and really take a look at the overall markets first. So if you have a pen and paper and you want to write this down, I would encourage you to do that. Taking a look at from a top-down analysis, the one thing you want to start with in the beginning is going to be not the stock, but actually we're going to take a look at the overall markets. So there's a couple of things, and you can have your own choice of what overall markets you want to take a look at. One of my main staples is the SPX, the S&P 500. And we're going to go through this, and I want to show you a couple of key things that we'll look at. But we're going to take a look at the SPX. We're going to take a look at the Dow Jones. We're going to take a look at the NDX. And then I don't know how many of you actually take a look at the VIX, but we're also going to take a look at the VIX, which is what I call the fear indicator. And it's a barometer of really complacency and really fear in the marketplace to be able to give you a good gauge to find out what traders are, how confident they are in the marketplace and how much fear do they have in the market. So I'm going to introduce those of you that are not aware of the VIX. I'm going to introduce you to the VIX as well. And those are really the main components. So it's going to be the SPX, that's Sam Paul X-ray. We're going to take a look at the Dow Jones. We'll look at the NDX, and then we'll wrap up with taking a look at the VIX. And that's just taking a look at the overall market. So that's looking at what the sentiment is of the marketplace. Now, before I get started here, and I have the SPX on my screen is what you should be looking at, the S&P 500. Couple key things that you want to do. A lot of folks will always ask, hey, are you a bull? Are you a bear? Are you neutral in the marketplace? And I tell folks all the time, look, we cannot make predictions in the marketplace. It's not the way this works. That's what rookie traders end up doing. They make predictions in the marketplace and they try to determine whether the market is going to be bullish or bearish 6 months from now. I couldn't tell you if the market's going to be bullish or bearish, a week from now, much less 6 months from now. And anyone that tells you they can, I'd run the other way. What you have to do is you have to map out your trades. You have to be able to go ahead and not predict the market, but you have to plan for the market. You have to plan for what the market movement is going to be, and you have to have a plan in place for however that market reacts. So, for example, when we take a look at this, you start to recognize one of the other things I put down on your notes is pivot points, key pivot points, and those are psychological areas in the marketplace that they mean something, because that's what really the markets are, how the markets are driven. The markets aren't driven by really facts. I have a lot of students come to me and say, I have a degree in finance, so I should do pretty well in the markets. No, not necessarily. Markets are really driven by psychology in the marketplace. They're driven by what people think and how they interpret news. And you can see here, and I'm going to as we take a look at these different areas, and I'm going to highlight a couple things for you folks. You can take a look at, for example, these key pivot points that I have outlined here, where these areas here, where this was about that 1370 area, right? And we can take a look. So I drew a little circle there about that area. We can take a look at this area here, right about that 1345, 1350 area. And we take a look at where we are recently, right? We can look at this. And we can, I didn't draw that circle just right, but you guys get the idea here. We can take a look at this area where we have that consolidation. These points, my friends, are not by coincidence that they're in the same general area. That's not a coincidence. That's where a lot of traders and investors will take a look at those areas and they determine whether it's a good buying opportunity or a good selling opportunity. And that's where you start to see the areas start to have volatility in a lot of cases. Because what will happen is investors and traders will make decisions based on historical data. And that's why it's very important when you're taking a look at this. So right now you should have on your list top-down analysis, the SPX, the Dow Jones, the NDX, right? But the other thing you want to add to that is I had you write down also pivot points, key pivot points, which are psychological areas. You also want to add to that list taking a look at multiple time frame analysis. Now, I'm not going to have time in this very short session here to go through and break this all the way down to multiple time frame analysis, but what I'm talking about is this, my friends. You want to take a look from, depending on the instrument that you're looking at, you want to look at starting with sometimes even a 20-year chart and break it all the way down from 20 to 10 to 5 to 2 to 1 to a 6-month to an intraday chart. Now, some of you might be thinking, well, Dinger, why would you do that if I'm a short-term trader? And the reason you do it is like driving a vehicle. When you're driving down the road, if you're just looking at a single time frame, you're going to be blindsided. You're not going to see what's coming. You're not going to be able to identify these key historical psychological pivot points. And that's what's really important, is to identify the strength of these areas that I have outlined here. So on the charts right now, you just see it in one area. But if you take it all the way back and you're going back several years, you're going to see that there's some common areas where they had some sticking points. So right now, let's talk about today's present day marketplace. So we take a look at this, and you can see I have this nice little diagonal line drawn here. We've had a nice little run to the upside, right? And you can actually draw another little diagonal line. And these are all nice key pivot points, right? So you can take a look at from this area here. You can take a look at how this market has just been on a run. And I didn't draw that exactly right, but you can take a look. You guys get the idea. You're taking a look and you're looking for trends. So we've been on a nice run. So what? What's the next step now? And this is what I had mentioned in Saturday's class that Jeff had mentioned where it was a live class where I was talking about the broad markets and what was next in some of the hot sectors. But this is where it starts. You take a look, and I told the students, I said, look, at this particular point in time, we were banging our head right against 1370. The markets had closed on Friday, if you go back and take a look, just about 1370 in that area there. And I'm just going to highlight this real briefly so we can zone in on this area here. When we took a look at this, we were right about that 1370 area, banging its head against that. And students asked me, hey, Dinger, are you bullish or are you bearish? I said, it depends. I said, ask me Monday and I'll let you know. And I know that's not the answer they wanted to hear, but I said, look, here's what you got to do. You got to map out the trades, the way the markets, whatever the footprints. This is like a snow. That's why you don't see a lot of stuff on my screen, because I keep it clean, much like you're looking for footprints in a clean pattern of snow. So now you're able to take a look, and I told them, I said, look, I said, if this breaks above 1370, now the bulls have taken control, and we can expect a run. A run to what? A run to about 1400 before we come up against another wall of resistance, because that's another key psychological area that we pull off of doing multiple time frame analysis. So we took a look at these areas. They said, well, what happens if it doesn't break above 1370? I said, then take a look for this thing to pull back down and maybe fluctuate between that 1370 area and that 1340, 1345 area where we had consolidation before. So this is how you base your plan, your trading plans. You take a look at the overall broad markets, and you have to recognize where the markets are. You have to be cognizant of what the key pivot points are. So right now, today, we broke above 1402. That's a bullish sign for the markets right now. So now you take a look at, okay, what's the next step? Where's the next pivot point? Where do you get that information right now? You're not going to get it off of this chart. You go back and you pull up charts on a multiple time frame analysis to find out where that next resistance level is. And you start looking for a congestion, like a traffic congestion, much like what we had back here. I'll just draw this briefly. Much like what we had right here at this area, where the markets actually were congested at 1340. And there was a lot of consolidation at that point. It just kept bouncing back and forth, and now recently, now it breaks above 1370. And then it didn't take long for it to break above that other key psychological area of 1400. We closed at 1402. But you don't just use the SPX as a way to gauge it, although this is something I put a heavy emphasis on. I take a look at also the brothers and sisters that go along with that. So what are they? So I already mentioned them, right? We're going to take a look at the NDX. So let's take a look at the NDX and see how that looks. Again, we have, movement to the upside. Powerful movement to the upside. We broke above. Again, let me highlight this area for you guys. We broke above this area here. Another key area of resistance, which is now a key area of support. And those are areas that you want to document. Those are areas that you want to take note of, because if the market has a reversal and the market doesn't hold these areas, the market doesn't hold 1370 or 1400 on the SPX, the market doesn't hold 2650 on the NDX. Those are signs, those can be used as technical indicators to tell you the direction of the market, and using them all together can give you confirmation on which way the market is headed. So we can take a look now. Let's pull up the Dow Jones and see what the Dow Jones is doing. So you see what I'm saying? You start to see some strength. You start to see some strength from the marketplace. And you get that by mapping this out ahead of time. Don't let anyone fool you into saying that you want to be able to go ahead and make a decision whether you're a bear or whether you're a bull. That's nonsense. No professional trader does that. Nobody worth their salt that makes a living off of the markets is going to tell you the markets are bullish or bearish. Load it up, boys. We're going to go hard and heavy. You have to wait for these breakouts. And really where you have the least amount of risk and the greatest reward is where you're able to recognize these key areas like this, where you have a key area. And I'm gonna show you some trades. I'm gonna take a look, and much like what Jeff said, any trade that I show you, it's gonna be in real time in the marketplace. Because I don't believe in going back and using a PowerPoint to show you what happened 5 years ago. That's not my style. My belief is, look, this is for educational purposes only. I'm showing you what I see in the marketplace. I'm pointing out what I consider the highest probabilities that I believe are out there in the marketplace. I'll outline what the risk is, what the reward is, and then you, and only you, make the decision on what you want to do. That's what I take a look at. Textbooks, DVDs are great, but there's got to be a time where you get out from sitting on the passenger side and you put yourself behind the wheel. So these are the things that I have found out have worked for my students, is being able to not just talk from a PowerPoint point of view, but outline these things from them. You guys are big boys and big girls. You make your own decisions. I'm just pointing out what I see. And I don't get every trade right. Nobody does. But what I do is I've become very, very disciplined in terms of being able to identify that risk, not after I make the trade, but before I pull the trigger. That is going to be key to your success and sticking to that plan. So we take a look at this. We see strength to the upside. We see the Dow Jones. We take a look at we've taken a look at the SPX, and you're going to go through. And I'm just giving an overview because I don't have a lot of time with you. We're going through an overview of being able to take a look at the broad markets. Again, multiple time frame analysis. And then if you want, you can actually even take a look. And I'm going to put on the SPX one more time. You can take a look and you can do an overlay here. And that's what I really like about the MetaStock platform, is that you're able easily to go ahead and insert. And those of you that don't know how to do this, you just grab the insert tab at the top, right? You hit security. And what we're going to do from here is we're going to put in US and we're going to put in VIX, right? That's the VIX. And now we're going to overlay this. And again, the VIX is going to be this wiggly line that's heading down the path here, the line chart. But what you're taking a look at, my friends, in terms of the VIX, and those of you that have never looked at the VIX or don't know what the VIX is, here's what I want you to write down. Just put down VIX, that's the VIX, and I just want you to keep it simple, right? The KISS methodology. Keep it simple, sister. So put down there, put VIX equals fear barometer. That's your measurement of fear in the marketplace. So if we come back and we take a look at this, if we come back and we look at, let me see if I can zoom out here just a tad. If we take a look at the SPX, which has that nice upward powerful trend to the upside, what do you see with the VIX, which is the line chart there? You see it heading down. What is that telling you? It's telling you, it's giving you confirmation, my friends, confirmation that there's a lot of confidence in the marketplace right now, and that fear is dissipating. Now, some people will tell you, oh man, the VIX is going down, so the markets, soon they're going to turn around. You don't know that. I mean, this could stay down there for a while. So what do? You map this trade out, right? Just like you would do with anything else. So as you see that the fear is going down and confidence is coming into the marketplace, which we see has been taking place, investors are pounding their chest with confidence. And when they're pounding their chest and they're feeling confident, they're not selling, they're buying. So you take a look and you say, well, can they be buying forever, Dinger? How does that all work? You treat the VIX as another indicator, another confirming indicator, just like you do with the SPX, just like you do with the Dow Jones and the NDX, and some of you that like to take a look at the Russell 2000. You treat the VIX the same darn way. And you have to come back and you take a look at this, and as you're looking at the VIX, what are you going to do? You're going to come over and you're going to draw some lines. You're going to draw lines where you can take a look, same type of deal, same scenario. You're taking a look at the VIX, and the scale is not over here to the right, guys. I put the scale over to this side, over to the left for the VIX. So those of you that are wondering, you have your eyeballing the numbers. But forget about the numbers for right now. What you want to take a look at is you want to map this up. And the better you can get at identifying support and resistance, man, the better that you are going to you're going to be able to identify things in the marketplace. But look at this. You're going to do the same thing here. You're going to identify a resistance area, right? And you can also identify. You can see that this area here it's broken, which also gives you confirmation. Here was the range on the lower end, on the support level. That was the range, and it broke below that, which gives you confirmation and makes sense to what we see here happen on the other indexes, the SPX, Dow Jones, and NDX, that they're breaking above with momentum. Here the fear is dissipating with momentum. But what do? You take a look at this and you're looking for a turnaround. You're looking for your major indicators to start to break below their levels, their new levels of support that you have mapped out. And you're also taking a look for your VIX to break above their new levels. So this area here that we have drawn, this bottom area, once you start to see the VIX turn around and break back above that area, that's where you have to take a look at the major indexes and see what they're doing. And that's where you're going to get your confirmation, and you're going to find out how much momentum. You start to use your other indicators like volume and whatnot. If it breaks above, if the VIX breaks above this particular area here around that 21 area, now you have some concern. And you're also taking a look at what the Dow Jones and your major indexes are doing. So that's your top-down analysis that's one level of your top-down analysis that you're taking a look at. That's the overall broader markets. So hopefully that was helpful for you. Now let's peel back the layers of the onion and go a little bit deeper. Let's take a look at the internals. Let's go a little bit deeper and find out where the big money's going. So when the market is going up, you want to go with that trend. When the market's going down, you want to go with that trend. Don't fight the trend. Don't go out there. I mean, I know we all hear our good friend Jim Cramer talk about, hey, when there's a bull market out there somewhere, and I'm going to find it for you. Well, if the market's turning down, yeah, you can find a bull market because all the sectors, they don't trade the same. But why would you want to go against the grain? I never understood that. You want to take a look and you want to really go with the wave, the major wave of the market. Right now, the major wave of the market's up. So when you take a look at this, there's no doubt about it. You can't fight that trend. When you take a look at this, what do you do then? You want to take a look and you want to go to take a look at the internals of the marketplace. Now, if you don't know the internals of the market and you don't know the 9 different major sectors of the SPX, I have it listed for you right here on the Naked Traders. And you can easily come over here and click on, go to the nakedtraders.com. You're going to click on free articles. And you come here, and this is all available for you. You come over here and you click on the secret to determining the strength of the market. Bada bing, bada boom. And we have listed for you here the XLK technology and all the different various holdings there. You can take a look at the XLF, all the different holdings there. You can come down and take a look at the XLE, all the different holdings there. So what do you do with them? Let's go back over here. What do you do with these things? So when we come over, we're going to take a look at, when we come back over this, we're going to take a look, and let's go ahead and take a look at some of these sectors. I'm not going to go through all of them, but I'm going to go through some key ones. Now think about this. You don't have to answer this question, but I want you to think about this. Do you know which sector has really given some umph? I know Jeff does, because I talked about this in Saturday's class, and the students said, no, we're going to get some pullback. I said, not in all the sectors. There's one sector that was there's a lot of sectors out there that are doing great, but there was one sector that stood out above the other. And that's the technology sector, right? That's not because I favor the technology. I don't fall in love with any of these things. I just go with the flow. So we put up XLK, and we take a look at this. There was a lot of momentum on Saturday that showed that this was one of the sectors that had already, before the other ones, had already broken above the resistance area. And I drew these lines in Saturday's class. I said, take a look at this for a minute and take a look and note that we have broken above key areas of resistance. And at the time we were sitting back here. And I said, look at these things. So what does this tell you? As you go through and you want to find gold in those hills, right? Where do you look for? What do you take a look at? Well, you're going to take a look at the sectors that are showing the greatest strength. And then you're going to want to take a look at the stocks. And this is the other nice thing. Now I'll tell you, this is a plug for MetaStock. And I don't work for MetaStock, but I use their platform. This is another plug for them. I will say that they have a lot of different tools for professional and serious traders. And one of the things on there that a lot of my students have access to, and what Jeff and I have worked on in his team, is putting together, because I know how difficult it is and how busy some of you guys are when it comes down to finding good, strong, fundamentally sound stocks. Because that's the other thing you want to take a look at, right? You don't just want to put your money in any investment. I don't care if you're a short-term trader or not. You want to put all the probabilities on your side. So you're investing in good, strong, solid, fundamentally sound stocks, the best of the best. So I put my own proprietary information and built it into a plugin for MetaStock where you click on it and bada bing, bada boom, it shows some explosive stocks. And I keep those, my team and I keep those things updated. So one of the stocks on that list happens to be, maybe one of your favorites, happens to be Apple. And I told students in 3 days, we went ahead and pulled out a 49% return in 3 days. I don't know if Jeff got involved in that, but I saw Jeff feverishly writing down that stock. And again, I said, I made my disclaimer myself. I said, look, this is the trade. Here's what it is. I outlined it. Saw Jeff feverishly writing it down, just like other students had written it down. And I said, and I went to options because I trade options and I'm also a futures trader. And I went into the options. I said, this is what you want. This is the trade setup that I'm looking at. You do what you want. This is the trade setup that I'm looking at. And it was explosive within 3 days, 49.8% return, cashed out, run the cash register, boom, bada bing, bada boom. But you get that information off of what? You get that information of doing the top-down analysis. Then you come down to the major internals of the sectors, and you identify which one has the greatest strength, which one's going to give you the biggest bang for your buck. And you can't be afraid. If you take a look at this, folks, here's the other thing I want to point out. A lot of people ask me, how do you find those explosive stocks? Well, one, I don't monkey around with cheap stocks. I don't monkey around with stocks that are not going to do anything and that I'm going to just throw my money to the wind. So I identify good, solid, fundamentally sound stocks with good businesses. And there's a lot of work that goes into that list that I created for my students and stuff, and that Jeff and I put together for MetaStock users. And it's not just taking a look at fundamentals. It's spending time listening to conference calls, going through the 10K filings, the annual reports, looking to see if there's any headwinds ahead of them. And then we cherry pick and pick out the best stocks in those sectors, and we take a look when opportunities like this happens, guys, where I have this circle here, and the sector pulls back down here. Now listen to what I'm about to say here, because this is a tip for you. When sectors pull back down and they're banging against a hard support area, but then you see that exhaustive wick there. Let me blow this up just a little bit more so you guys can see what I'm talking about here. I didn't want to get too deep into this, but I want to bring this up. See this exhaustive wick on this one here that's like a hammer. It's pulled back down and it's sitting right at support. Well, there's a couple things that I like about this. One, it's at a key area, a key pivot point, a key psychological area. So the question in my mind goes like this. Will that area hold, or will it snap like a dry twig and go lower? Now, if it holds, and you can see that exhaustive wick there and how it closed right above that support line, then I take a look at my favorite picks within this particular sector. And I take a look at what they've done, and I say, did they have a pullback on this particular date? So this is what, let me take a look at this date. If we take a look at the data, pull up the data window here. This was back on, let me write this down, guys. That was back on March the 6th. I'm getting off a little bit of topic here, but I think this is important to note when I see something on the chart. So there we have March the 6th. We have the XLK sector pull back against hard support. Now take a look at this. Let's go back and let's take a look at Apple. Let's pull Apple up for a quick second. My friends, look at this. Look at that area there. I'm going to just zoom out just a tad. But this was an area of key support, key psychological area that I drew before it pulled back down to this area. And we take a look at this and we say, is that area holding, yes or no? And the answer is yes, it's holding. See, this is where you minimize your risk, right? And this is a topic for another day, but worth mentioning. Those of you that are saying, how do I minimize my risk and maximize my reward? It's timing in the marketplace. And timing is going to be associated with what? With your ability to recognize the opportunities based on what? Based on key psychological pivot points. When you see it hold here, and if Apple would have broke down and closed below, could have been a good shorting opportunity, right? I would have had to take a look at the XLK to find out if the XLK was also breaking down, and maybe some of the other sister companies out there. But it didn't break down. It held. The XLK held. Many of the other technologies held at that point. And I looked at this, and I already knew this was one of my darlings. So what did I do? I said, you know what? This is the time to get in and ride this thing up. Now, what if we're wrong? Because you always have to ask yourself that question. What if you're wrong? Well, if you're wrong, you've already outlined what your risk is. And then you decide that, right? You decide on what your position size is going to be. You decide on how much you're going to put into the particular trade. You decide that if it breaks below and closes below whatever your stop is, and that stop shouldn't be much lower than, let me just kind of circle this wherever it is. It's all a judgment call for you, right? But it's based off of these pivot points. So you're not gonna allow it. If you're correct on the trade, it shouldn't, and you're saying this is my support area, it shouldn't break much below that area. And if it does, well, then you have to have the discipline to go ahead and cut bait and say I was wrong. But your risk is minimized at that point because it's sitting right at support. You see what I'm saying? So these are the things that you start to take a look at. So we're looking at right now, you should have on your list on a top-down analysis, you're looking at your overall markets. You're taking a look at those broader markets, those three major indexes, along with the VIX for additional confirmation. Then you drop down a level and you're taking a look at the internals. You're looking at things like the XLK. We can look at other ones. We can pull up like let's see here, we'll pull up the XLE for energy and see what that's doing. We can take a look at maybe and we'll say, man, yeah, it's looking pretty strong. And again, it comes down, if Jeff wants me to come back, I can go ahead and do another section on really getting down into technical analysis. But I want to stick with the topic of discussion today in terms of really a methodology that you can use going forward in any market. But just real quick, take a look at this. You can start to identify things as, ooh, that's a nice upward trend, right? But then from a technical analysis point of view, what do? You come over and you take a look at this and you say, wait a minute now. Let's take a look at this real quick. Let's come back over at this area here where you see where you have all this consolidation here. What is that, about around May? You take a look at that and it kind of lines up with what you had back in July. And you draw that line. You say, look at that. Let's go ahead and take a look at this area here. And we can draw that, bada beam, bada boom. And we can take a look and say, interesting, isn't it? We have our little ascending triangle there, upward trend, a little bit of a pullback. Nothing to be afraid of when we talk about these pullbacks, right? Let me just kind of highlight this for us. Bring this a little bit closer for us. Nothing to be afraid of about when we're talking about these pullbacks, but pullback to what? That's a pullback to a pretty strong, significant area of what? Of support on a breakout. So now you come back and you start taking a look at other trades in this area, in the energy sector, right? That also have pulled back down. Stocks and companies that have a global footprint that are going somewhere. And you look at those type of trades and you say to yourself, let me take a deeper look at this. Let me take a look at, we'll talk about MACDs and different indicators at another time. But let's take a look at this trade and see where this thing could possibly be going. And where's my risk on a trade like this? In my opinion, my friends, it's minimized. Why? Because now I just drew this line very quickly, but it's minimized. Why? Because you're down there at that support level. And if you take a look and you see, well, how's this thing trending? And we look at this from a different angle. Look at this area down here. Do you see this area where we have that support area? A lot of consolidation. Do you see where that gap is? I'm real big on gaps. Key psychological area. And you draw this line here. And you see how it's channeled. So now if you're wrong on the trade, what do? Well, you're going to know you're wrong on the trade because it's going to break down below the low of this area over here. So you'll take a look at this and you want to keep an eye on this. You want to take a look and you say, good, solid, fundamentally sound company. But I'm going to be looking at this area right there. And if it breaks down and closes below, well, then I have concern. I can go ahead and say, let me cut bait. But my risk is minimized and my reward is definitely there because look at the breadth of that movement there if it makes it. And then what happens if it breaks out of this area? Now we're off to the races. So these are just examples of what you take a look at, but you get that from looking at the overall markets. You take a look at the individual sectors. Let's take a look at another sector real quick. You take a look at the XL. Let's look at the XLY, for instance. Look at that. Wouldn't you want to be a part of that little ride there? These are the things that you start to take a look at. Consumer discretionary. Now, a lot of the consumer discretionary stocks, if you go back and you take a look at them, like when you take a look at, for example, let's say Home Depot, right? Home Depot is part of that. And you look at it as, oh man, that's a nice run. What I'm looking for, and you can take a look at other ones, how about, say, for example, Starbucks, SBUX. Ooh, that's another nice run. We caught that bad boy on the breakout. But think about this, guys. What are you looking for? So the mistake of rookie traders, they get in too late. And I don't want to see you guys do that. So I'm not going to say this can't run anymore. I'm not going to say that. It's not what I'm saying. But I'm saying set yourself up for the highest probability trades you possibly can. So we already saw that the consumer discretionaries, right, XLY, have been off to the races. Nice move to the upside. But we looked at those other things like Starbucks and Home Depot and whatnot, and they were like, not really sure if it's time to make that move just yet on these stocks. So you continue digging through this process, and let's say you come up with another one, and you say, how about Comcast? Now there's an interesting story that we can talk about at another date, right? Because we can look at this area here, and we can see that, look at this, my friends. We can see that there is a gap to be filled. 92% of the time, those gaps are filled. So what do you do in a situation like this? Do you get in now, or do you wait? You know, you could wait for the pullback, wait for this thing to fill the gap, which would give you a low risk opportunity when it pulls back to about 27.50. Because you know it comes down, it fills that gap, you dive in. If you're right on the trade, it's going to bounce and it's going to go up. If you're wrong on the trade, you cut bait, not much lower than 27.50. Those are the things you take a look at. Now, if you're an options trader, that's a whole another story, right? You can set this trade up where you can make money if it continues going up, which are the trades I like. You can make money if it stays flat. Love those type of trades. You can make money if you're wrong on the trade and it pulls back against you. We do that all the time. Love those type of trades. Making money when you're wrong. But you identify, it all starts with taking a look at the charts first, right? So we identify these things and we say, oh, we're going to wait for this one little gap there. So you keep digging through, and you say, let me find some other ones that are in this consumer discretionary, right? How about Mickey D's, my friends? And again, I make no recommendations, no suggestions whatsoever. You make your own decisions. I'm just calling out what I see on the charts. How about Mickey D's? How about a trade that has already pulled back in a sector that has a good, solid looking trend? And now we take a look at something like Mickey D's, where we say to ourselves, this is something worth taking a look at. Look at this area right here, my friends, where we look at this and we see a strong support area. Let me zoom in on this. So the overall trend is still to the upside. No denying that. Overall trend is still to the upside. But now what we do is we take a look and we're looking at our risk. We're taking a look at where that trade is sitting right now. We're looking at the momentum, and you ask yourself one question. Do you feel lucky? That's not the question you ask, right? You take a look at this, though, and you say to yourself, this thing has pulled back down to a key psychological pivot point, and we've identified these things, where now we're taking a look at this. If we're right on the trade, we're going to know it because it's going to continue moving forward. Where do you set your stop loss on this thing? Right below the low, guys. Right below the low. Your risk is minimized. Your profits are maximized. If you're wrong on the trade, you learn to live with it. You love it. You get out. You take a minimal loss. You don't let this thing crack much below that low point. These are the things you start to take a look at. Good, solid looking trends with good industry groups and companies that have a global footprint. This is really how you make money in the marketplace. But it takes a lot of work and stuff to be able to go through this process. These are the things that we teach our students at the Naked Traders, guys. Take a look at this, for instance. So let's take a look at another one. Let's go through and take a look at a couple more. XLP. So here we have the XLP, right? We take a look at this. We saw that's a nice looking trade to the upside. Let's take a look at WAG. Let's move this thing back for a minute. Let's zoom out of this. Do you see what I see, guys? So here, a lot of folks will be, oh man, I'm scared of this thing. How are you? But then yet when it runs 5, 10, 15 points to the upside, then they want to get in. You take a look at these opportunities, you have to understand why the stock has fallen off. You have to be able to go back and take a look and do your analysis from a fundamental point of view as well as a technical point of view. You start to outline what your risk is on the particular trade, and that's where you start to make some decisions, and more importantly, you start to make some money in the marketplace. These are things that you want to take note of. Identifying your risk ahead of time is where it always starts. But how do you know how do you find these type of trades? Again, top-down analysis, taking a look at the sectors that matter, taking a look at where you have the biggest opportunity for growth in your trades. This is where you're going to make the money. So go through the sectors, my friends. Take a look at each one of these things. I mean, we can go on and on and on. I mean, I enjoy this stuff. You can take a look at the XLI, the industrial sector. Not another nice little move to the upside. What stocks belong in that might give you an opportunity? Well, it might be something like this. John Deere. It just might be something like that. Those are the things you want to take a look at. Low risk, high probability. Low risk, high probability. Those are the things that you want to keep aware of. Mapping out these things ahead of time. Again, no recommendations, no suggestions. I'm pointing out what I see on the charts. You make your own decisions. But you want to understand how to make money. These are the things that you want to start taking a look at. Let me share something with you real quick. I'm actually going to just give me one quick second here. What I want to bring up is another chart for you. Just give me one quick second. But as we're doing this, those of you that were taking notes on this, and I highly encourage you to have been taking notes on this, and I know Jeff is recording this for I guess your viewing pleasure later on, but I would say you should have on there the overall broad markets, taking a look at the VIX as well, going through the individual sectors, and I showed you where you can get that right off of our site there. Take a look at that. And then I would go back through and I would take a look at, after you've identified the sectors, I would take a look at the stocks that are going to make a difference in your portfolios. Be choosy. Be choosy. Be selective on the stocks that are going to make a difference. Don't just put your money anywhere. Here's one thing I want to bring up, because a lot of folks may ask for contact information later on. Let me go ahead and get rid of this. And I want to go ahead and share my screen one more time. Okay, desktop. So, if you guys enjoyed what you saw, there's me. There's my contact information, and just a little bit about this. And I tell students all the time. I've been in the market since 1981. I got into the markets and was introduced by a futures trader in '81 here in Santa Clara, California, and I was hooked ever since. And now I'm a options trader. I trade stocks, options, as well as futures. I've taught around the globe. I'm very, very good at what I do. I enjoy what I do, and I have a passion for what I do in the marketplace. A little bit about the naked traders in my team and about my students. The student that's not right for me is a student that's going to sit on the sideline, because there's the reason that I developed the nakedtraders.com. And that was because when I would go out and teach for other different companies, and I designed a lot of the material for these companies, so the material wasn't the issue. It was just the methodology that it was delivered. And a lot of the students would spend $30,000, $40,000 for their education. And they would go in there and it'd be a year, a 2-year program. And I'd find out, I'd be in front of a class of about 1,200 people, and I'd ask them to raise their hands for those of them that have been traded in the marketplace. And everybody's hand would go up. And then I would say, let me ask you to go ahead and let me ask it a different way and find out how many of you are actually trading live money. Very few hands would go up. And I asked why. And they said, you know, Dinger, they said, while the material is good, we're still confused and we have fear and we don't know which direction to go. And I saw that back then, it resonated with me, and I saw that that was an opportunity for me to create a premier educational platform where I didn't have students trading paper money. I wanted to have students active in the marketplace, and some of my students are living off the markets. I have a couple professional traders that are on my team, but and when I say on my team, part of the family as students. And the reason for that is because I have designed this where for the beginner, I take you by the hand and set up the trades from A to Z. And it includes the option trades and everything else. And I say, you make the decision on what you want to do. Here's what I'm seeing in the marketplace. And I'm aiming to go ahead and make sure that their portfolios grow over a long-term type of a period. And I've been very, very successful here. The other thing that I do for the students that are advanced students is that we do all the homework for you. All the stuff that's required that nobody else really wants to do or nobody else wants to tell you about, the stuff that you have to do in order to be successful in the marketplace, the reports you have to go through, the articles that you have to read, the news you have to listen to, the conference calls that you have to be on, the fundamental analysis, and then you finally get to the charts and you start doing chart interpretation. All that stuff we do for you. So I have traders that come to me and say, Dinger, I want to be able to go ahead and be part of your team just for the trades. Because I outlined probably about 3 or 4. You saw it tonight. I went through the stocks. Now, had this been my regular class, I would have also been putting down the option trades. I will tell you what I'll do for the students on this call. I will do this. If you go to thenakedtraders.com and there is a sign-up box. And it doesn't cost you anything. You just have to give your name and your number and your email address. You don't want to do it, that's fine. But you do that, I'll go ahead and I'll send you a recording of trade setups that are being set up with option trades for the next coming week. High probability trades, outlining the risk and everything else. All you got to do is go to thenakedtraders.com, put in your information. And if you're interested in the mentorship program, I'll tell you right now, because I hide nothing. It's $3,000 for a year, for 1 year. And we meet through the webinar, kind of like what we're doing here, and they're all recorded and archived. We meet through the webinar every Saturday at 10 o'clock a.m. Pacific Standard Time. And if you can't make it or you have to leave early, that's fine. They're recorded. But you're going to get education along with it. You're going to get hand-holding along with it. And you're going to get trades that are going to come your way. Solid trades that will come your way. And then you make the decision. So, folks, I hope that you've enjoyed what I had to share with you. I always enjoyed a good crowd and wish I could see some of you guys in person. But, you know, I don't know how Jeff does this. If you want any type of Q&A, Jeff, that's going to be up to you. I can take questions, do whatever you guys want to do. Jeff?
That's up to you, Bruce. I don't see a lot of questions coming in. Do you guys have any questions for Bruce? And let's do this as well. Looks like Carl is going to have a question. Maybe not.
Okay. Well, guys, it's been my pleasure. I mean, you know, those of you that want to reach out to me, I have no problem in being able to just go to the website and I'll get back to you. You want me to help you out and take a look at some of the things within your portfolio? While I'm not going to give you recommendations, I'll tell you what I see. And I'm looking to build long-term relationships with people that are serious about the market. So I'm hoping that you've enjoyed the course. So Carl asked, Bruce, is there a limit on your course? I'm not sure what you mean by a limit. If you're looking like, is this a promotion that I'm doing? Is there a time limit? The answer is no. It's not where I go. I price this thing so ridiculously low, Carl. I mean, if you go out to any of the other big major firms, you're looking at, for what I deliver, $30,000 to $40,000 minimum. And they're not going to handhold you, outline trades. You have a question on your stocks, they're going to go into a workbook that's 5 years old and say, well, we don't want to make any recommendations, so what we're going to do is let's take a look at something similar to your situation. That's not the game I play. I'm a trader talking to you as a trader. And I've always believed that students had believed before. I mean, $30,000, $40,000, is it worth it? I think it is. I paid it, but and I paid a lot more than that. But I wanted to price point this thing for a point in time that any student that was serious about the market could afford it. And I will say this: I opened up a Roth IRA, and a lot of the trades that I have done, I opened up a Roth IRA last year. I can't remember exactly when it was, for $4,000, to show students you don't need a lot of money to be able to go ahead and do what I'm doing with the type of trades that I'm doing. Our goal is 6% a month. We don't always get it, but we sure came darn close last year. The portfolio increased from 4,000 to just a hair over $7,200 in less than a year's time. Why do we choose 6% a month? Because your account doubles every single year. In 8 years, you start with, they say, a $5,000 account. You do the math on it. 8 years, you're looking at a 7-figure account with very conservative trades that are non-directional. So they involve options that allow you the flexibility of being wrong on the trade and allowing it to pull back to the downside or upside, whichever direction that we're trading at the time. We also do directional trades, but the meat and potatoes of our trades are spread trades, non-directional trades, which is where you're going to get your consistency and the compounding growth month after month, year after year. So guys, it has been my pleasure. I look forward to teaming up with you folks. Any questions whatsoever, feel free to reach out to me. The info, info, at thenakedtraders.com will get to not only my team, but will also copy me on it. And I take a personal diligence in being able to reach out to every single student. So it's been my pleasure. And Jeff Gibby, I want to thank you and MetaStock for allowing me to present to the students here.